first off, happy Thanksgiving, everybody. We know that this is that time of year where a lot of people are traveling. We wish you safe travels. We wish you all the best possible time with your families. We've got the cane cap turkey here for you. But seriously, a lot of what we do is very intensive. We're watching the markets all the time. Luckily, the markets are closed tomorrow. I'll be taking off early today because I have a flight. Traded well yesterday, which makes me feel a little bit better about that. But take some time to step away from the screens. And like I said, enjoy time with family and friends. But let's get into today's episode, and we'll start by introducing the panel. Coach Dipka, good morning. What's going on?
Morning, guys. Morning. Hope we have a great Thanksgiving. Everybody listening, and try and relax a little bit, but ultimately come ready to go on Monday next week. Volume should be light today. We'll talk about it in today's episode.
All right, Money Mander.
Good morning, ladies and gents. Alejandro had a great point. I hope everyone enjoys your reset tomorrow for Thanksgiving. But that being said, limited opportunity this week on the short week, so let's make the most of it.
Absolutely. All right, Diamond.
What's going on, guys? Happy Thanksgiving to everybody. Like Alejandro said, safe travels to everybody, traveling back and forth this week. And enjoy your time off. Let's get after it next weekend.
All right, and we got Snipes.
Good morning. Let's eat some bags, and then let's eat some turkey.
All right, guys. So today we are a bit short-staffed because we do have two guys that are traveling. But let's get into the show, and we'll start with our Fed forecast and economic calendar. FOMC today, boys.
Yeah, so we've got the FOMC minutes released today at 2:00. Really going to be the premier economic release. It's going to come out, for the entire week. So the FOMC minutes release is not the same as the interest rate decision. I know that Alejandro has liked to make that distinction before. Sometimes it's not the same thing. The minutes release is just basically a statement that will give a transcript, right, from the November 2nd meeting. And so it's nothing new. The Fed statement last meeting, right, on the 2nd, it was dovish itself, the actual statement, and that's why we saw the market rally initially, right? And then Powell comes out with his press conference and squashes all hopes for a pivot, and the market trades significantly lower that day and the next day. And so when we get this FOMC minutes release today, we're going to watch for language that's different or confirms what was said at the last meeting in his press conference in their release, right? So just to sort of recap from last meeting, there were really three primary takeaways, in my opinion. The first being higher for longer, right? He mentioned that the federal funds rate target for 2023 would likely be higher than anticipated. The Fed wants to bring rates above neutral and hold them there for a little while, right? Keep those financial conditions restrictive enough to cool down inflation and slow the economy, right? So that's one thing. The second thing is that a pause in rate hikes would be very premature, right? I know that that's what a lot of people were looking for going into the meeting. When is the Fed going to pivot? When is the Fed going to stop raising these rates? And he made it extremely clear that doing so at this point in time would be very premature. Use the word very there. Keep that in mind. The Fed would much rather over tighten in this scenario than under tighten because, as he said, they believe that they have the tools to deal with a potential recession should they wind up over tightening, right? Whereas if you under tighten, they don't really have as many tools to deal with rampant hyperinflation, right? And the last thing being, they talked about a reduction in the size of the rate hikes coming as soon as December, which is obviously welcomed by markets. And that's being priced in right now. Before the November meeting, I think that they were pricing at a 51% chance of a 50 basis point hike in December. That probability has jumped all the way up to 75.8% chance of a 50 basis point hike in December relative to that 75 basis points that we've gotten the last 2 or 3 times. So those are things that we're going to pay attention to. We're going to see if the language in the actual meeting matches up with those precedents that Jay Powell had set in his press conference.
Yeah, and a great segue here into the debt markets that I'm going to cover right off of this is that, the more clarity he gave on those further interest rate hikes, he said, eventually come December, we may lower that, lower the rate of the hikes at least, kind of signaled this potential top on further dated yields, right? The 10 years down about 60 basis points. TLT is that 20-year plus longer dated bond ETF. That thing's up 10% off of lows. But the big key here is that he said, right into the hawkish statement that you mentioned, in that, we still have a long ways to go here, and they're really leaning against under tightening here, like premature monetary policy. Like you said, they'd rather over tighten and really kick inflation in the ass here, and then deal with a recession and maybe higher unemployment later, should that come, right? So we haven't seen any bids really on the nearer term, like the 1 year, the 3 month, the 6 month, the 2 year. And so what that's done is you have your 10-year come down in yields while your 2 year has pretty much remained stagnant. So Ryan, if you could pull up this 210 chart for me, what this has led to is the deepest 210 inversion we've seen in 40 years. And so we've been covering this pretty much since it went inverted, months ago. Once it got to like a minus 30 basis point inversion, we were all over this. I was freaking out. We were letting the Discord know. We hit on this probably 5 times now on Beat the Bell. Just yesterday, this closed at a minus 76 basis point inversion. By far, it's almost double the deepest we've seen in 40 years. And so, while on the surface, the markets are loving this rally. Obviously, your longer dated bonds are getting bids, like I was saying. This is really aggressively frightening under the surface. If you see the gray in the background of this chart here, those gray bars are recessions, years of recession in the economy. And you can see pretty much every single time this has inverted has led to at least a 1 year recession in the economy. And so, this being then double the deepest we've seen in 40 years. Look how long the recession was. If you can go back and see in 1980 there, the last time we were significantly deepened like this, we saw almost a 2 year recession following this. And so this has a little bit longer runtime than, say other indicators maybe, but it hits at almost 100%. And so while this might not be next week, this might not be next month, everyone's on this seasonality and the rally and this, that, and the other. If you really zoom out here and look at a more macro level analysis of our economy, of the stock market, this thing's pretty much bulletproof. And it's really signaling that maybe into next year, we see a pretty significant recession here.
Yeah. Last thing I'll touch on before we hand it back to Alejandro, we actually just got initial claims while we were talking. Initial claims came in at 240,000 over 225,000 expected, is 6%, 6% over the expectation, basically. So that just shows you again, right? We've been talking about how the labor market tightness has really allowed the Fed to sort of have their way with interest rates and really just be super aggressive. And this is sort of the first thing that we're seeing, that it may not be as tight as we thought. So we're going to have to monitor that going forward into the end of the year and see how that's going to affect the Fed. But that's going to do it for us. We'll send it back to Alejandro.
Awesome. Thank you, gentlemen. Let's go over now to the system, guys. I'm going to go ahead and share my screen. Yesterday, we hit a massive, massive trade. So first off, I want to go to the 30-minute chart. We're looking at the hourly here. If you take a look at the 30-minute chart, we got the buy signal early in the day, which is, again, the bullish cross of the 10 and the 50 SMA. So then you have to ask yourself, okay, what is the hourly chart telling me? Is it telling me the same story? And if it is, that could set up a good trade opportunity, and that's why we saw that strong continuation. So on the hourly chart, we were also breaking over the 50 SMA. Later on in the day, we got that bullish cross of the 10 SMA over the 50 SMA. I'll repeat it over and over and over again until everybody understands it. Hopefully you do by this point in time. But when the two charts are telling the same story, that's when we want to be trading, guys. Remember, on Monday, we got the break over the 50 SMA, but we didn't see any continuation, and we came right back down. You might have been asking yourself, well, we broke over the 50 SMA. That should be bullish, right? How come nothing happened? Well, if you were watching the hourly chart, you would have seen that we were still below the 50 SMA. So that's why it was impossible for the market to start moving. So that was a great day to not trade, but took advantage of the break over the 50 SMA and that buy signal yesterday. Now, today, a couple things. First off, it's a shortened week. Today might be lower volume than usual. We also have FOMC. I have no real interest in opening a new trade today, as I don't feel that any trade that I could enter today would be better than the trade that we took yesterday on that buy signal. That was a 40-point move higher with basically zero pullbacks. So now I'm in some longs. I'm hoping that the market continues higher. It looks like we are selling just a bit here. But today is all about, will the trend continue? And if it does, I'll ride the trend. Otherwise, I'll use those trailing stops to exit my position. But we are going to be pretty extended from the 50 SMA on the 30-minute SPX chart. So rushing into a new long is really of minimal interest for me. Okay, so understanding the opportunity. When was the real opportunity to get long? When was the best opportunity to make a strong trade? That was yesterday in the morning, and we absolutely nailed it, and we rode the trend the entire day. Now, what you don't want to do is get ahead of yourself and say, oh, the market is going higher. Here comes 4,100. 4,100 may come, but it may not be smooth sailing. Also remembering that FOMC can definitely make things a little bit tricky. So that's my mindset today, guys. I'm just being careful. I'm simply riding the trend. If it continues, I'm going to make even more money. If it doesn't, I'm still going to make money, and I'll enjoy Thanksgiving with the family. All right. So I'll go ahead and I'll stop sharing my screen here. So that was the system, guys. Now let's go over to Noah for unusual catch of the day.
What's going on, guys? I'm going to take over unusual catch of the day for us today. Mo cannot be with us, but that's okay. That's okay, because I am also an expert flow reader, and I've got something really nice for you guys. We've got Dollar Tree today. Dollar Tree had 87,000 in weekly in the money calls, bought yesterday near the close, expiring on Friday. Now, this is not the largest size order that we've seen. We see some 100, 200, 300K, $1 million orders. The reason that this one caught my eye is the volume was higher than the opening interest, showing me that it's most likely an opening trade. Secondly, it was a floor trade, which means that it was executed by a trader on the floor of the New York Stock Exchange. They generally tend to be better than the rest of us at trading. So just keep that in mind. The stock was down 7.7% today following an EPS miss on earnings and a guide down for full year 23, citing inflationary headwinds in their supply chain. Having several beaten down names recover after their poor earnings. So Disney is top of mind, Snapchat, Target, all of those gapped down on their earnings and then saw a sharp recovery in the days following. And it appears that one floor trader is using a similar playbook here with Dollar Tree, betting on a rally into the end of the week. Ryan, if we can get that chart up. There we go. So on the daily chart, we got to bounce off of the 50 simple moving average and also the anchored VWAP from year-to-date lows. So some solid support below us, not to mention that $150 psych level, which we were able to climb up and close over. For me, I'll be watching this one for some upside continuation into the end of the week. So today and Friday. That's our unusual catch of the day. I will pass it back to Alejandro.
It's funny when you see something like that, like Dollar Tree, because you would never ever think of that's not like a stock you're watching typically.
Exactly, and that's why it stood out to me, right? So I have my settings on my flow scanner, and then there's names that always come through: your Nvidias, your Apples, your Spies, XYZ. And then when I see a name that I don't normally see, I'm like, oh, why is this here? I went and looked; they had earnings. Okay, that makes sense. They gapped down. That makes sense. How many of these names have we been seeing gap down on earnings, and then you look back the next day and they're up 5-6% from the lows, right? So that's what I'm looking for.
So I guess my question for you is, how do you approach trading a name that you're not typically trading, something that you're not used to trading?
Yeah, so two things. One, I would probably go lighter size, right? So if my normal position size is, say, $1,000, maybe I would go $750, right? Go a little bit lighter size as I'm not used to the contracts, the liquidity and all that. And then secondly, I would probably go with a further out expiry. So that trade that we just showed you was for weekly contracts. Maybe I would take next week's, a little bit less volatile, kind of cost me more up front, but it'll save me on the downside. If I am wrong about the trade, they won't like go to zero or something like that.
Yeah, absolutely. I think the most important thing, and basically what you're saying, is don't get overly aggressive just because you see something in the flow. Just remember, if you're not used to trading the name, kind of ease into it, and try to capitalize on the opportunity without risking too much money. All right, guys. 100%. Let's move over to Coach Dipka now for Dipka's certified levels of the day.
Yeah, thanks, Alejandro. So you guys know the deal by now. Half of you are still in bed. Half of you are traveling for the week for Thanksgiving, right? And you didn't do your charting. Let's be real. 90% you didn't do your charting for today. But you come on here and Dipka was grinding at the late hour of the night doing this charting for you guys. All right. For you guys, because I care about you. So let's pull up the chart, Ryan. Let's set the timer to 60 seconds and let's dissect the 4 levels that we need to watch today. We're going to keep it real simple. Don't overcomplicate this. The big watch for today is 402.31. That is the high on the daily right now. The most recent high on the daily chart before we sold off back down to 390 is 402.31. Okay, so where should your target be longs? 402.31 makes the most sense, right? That's definitely target overhead. Now, I don't want to see this, but a retest of 400 would be nice for a hold, basic 400 level. Now, if we break that, 397.25 is going to be the big support for today. If that gives, we could see a spilling effect to the downside. I don't think we'll have enough volume today. And I don't think FOMC, Powell's not speaking, so it shouldn't be as significant as the previous one where we get that $10 move right before holiday. I don't see it, but 397.25 needs to hold. If that breaks, big concern. Red buzzers are going off, right? If we break 402.31, look for 405.14 and 404.55 as the top level resistance, right? So my top watch today, we'll get more into in the later session, but watch that 402.31, okay, guys? 402.31 is the big one for resistance. Now, 60 seconds exactly. Got it done just on time as usual. We will pass it back to Alejandro now to put you guys back to bed.
Well, lucky for you, brother. We're coming right back to you for Bet the Bell since you're taking Ramsey's place today.
Well, I think we just had half the listeners already tune out as we just shifted back to you for a second. And it's all right. I'll try and save it. I'll try and save the show here. But we're going to go with Beat the Bell. We're going to pull all of the analysts, whatever you want to call them, up here. We got 5 of us total here. Maybe we'll bring in producer Ryan Novak for a little guest appearance here. But we're going to start with Beat the Bell, green or red. The people want to know, Alejandro, what do you got? Green or red today, and why?
I think we closed green today. Look, yesterday I think was a big day for the market. It was the first time we've seen any sort of trend. There was clear buying on the tape.
All right, thank you. Green or red today, Money Mander?
I'm going to say green on a low volume melt up as well. We got cup and handles across the board. I think these look good for continued upside.
Nice. Shave this morning?
Yeah. Enjoy the little raisin.
Gotcha. All right, so we got a sort of a holiday question here. Black Friday this week, right? Will Amazon, the people need to know, guys, what are you thinking? Amazon, right? Big day for Amazon on Friday, Cyber Monday. Will Amazon open over 2.5% on Monday?
Who is this for?
Yeah, anyone. This is when you ask someone.
Okay, no. Sorry. New to the whole post in this section. We'll start with diamond trades here.
I'll say no. They already got it down for the holiday season. They're doing everything they can. They had Prime Day like 4 times this year. They're in trouble. The ship's on fire. They're not capping up for
fire. Shit. Okay. All right, Dwayne trades Amazon over 2.5% on Monday. We'll give you 2%.
I'm in full bull mode.
Okay. All right, Money Mander, what are you thinking here?
Nah, I'm on Diamond's boat here. They're doing everything they can to make some money, but I think investors are out of this name in particular, so I'm not saying over 2%.
Stock Sniper, bags or bagged Amazon Monday, 2%.
I'm going to have to go with it going down right now. Retail's been pretty weak lately, and I think that consumer goods will probably not be one of the leading sectors coming into this holiday season.
All right, awesome. Question number 3, guys. So many of you have probably noted the light volume on SPY this week. Okay, so the people want to know what you guys think here. Are we going to see greater than 52 million volume today? And let me give you some facts. And this is on SPY, by the way. Yesterday, we saw 60.2 million. Monday, we saw 51.2. And the daily average is about 88 to 93 is what I recorded. So what are you guys thinking? Are we going to see over 52? So Monday was 51. Yesterday was 60. We have FOMC today, but it is also the holiday tomorrow. You think it's going to be worth trading, and you think we'll see over 52? Money Mander, what do you think?
Worth trading, yes, but I'm going to say the under on this 52 million. I think yesterday we saw that slight volume uptick on people placing their bets into the weekend here. But the day before Thanksgiving, all of Wall Street's taking off today. I think it's just going to be computers fighting each other.
Computers fight each other. That's great. All right, Stock Sniper, what are you thinking here?
I think that we're not going to have the volume that we need. We are in a holiday week, and there's typically less trading when we are on market holidays.
Gotcha. All right, guys, thank you. So we're going to wrap it up with one Thanksgiving-based question. We're going to bring in the big old Italian. He's grubbing this week. Money Mander, what do you got? Mashed potatoes with gravy or macaroni?
I mean, I've never had macaroni on Thanksgiving, so this is a pretty crazy question here. Like, yeah, Italians still eat mashed potatoes, but I'm on the stuffing side of the spectrum here.
Gotcha. Mashed potatoes or stuffing you going with? You going with stuffing?
I'm taking stuffing.
Gotcha. All right, Diamond Trades.
It's not even one of the answers.
No macaroni ever is one of the most communist things I've ever heard in my life. I'm definitely gonna have some macaroni to tomorrow. Like that's how it goes. It's kind of bizarre. I don't get it. What kind of question
I think in the Italian households, this might be the one day of the year that macaroni is not on the menu.
You got like the pasta?
Is that like a common thing? You guys have,
or what's going on?
Maybe some like antipasto, like a macaroni salad to start. But
there you go.
I'm Hispanic.
All right, guys,
I just eat rice and beans.
That's gonna wrap it up, guys.
Thanksgiving.
That's going to wrap it up, guys. We'll pass it back to Alejandro here. He will put you in the holiday mood, make you not want to trade, and put you back to sleep here. Thank you guys for tuning in. Hope you enjoyed me as the temporary host for Beat the Bell or Bet the Bell. And, yeah, Hondo, you got it.
Dipka, that was good. You're giving Ramsey a run for his money. He's not going to be too happy to hear that you killed him.
Yeah, I try to just be a little controversial,
Yeah, good job. Good job. All right. Member Spotlight, as promised, we're going to be doing these more often. There's one guy that stood out over the past couple of days, particularly yesterday, because he had iron nuts, holding, hodling, calls all day long. Absolute beast. Took Coach Dipka's trade idea, but Dipka, of course, has paper hands and doesn't hold anything past 15%. Mr. Woofers. Woofers, good shit, my man. Seriously, awesome trading. Woofers, you're one of my favorites. You love the system, even though sometimes you fade the system and you think it's hilarious or whatever. We always appreciate you gassing Kane Cap. You've been trading very, very well, making a lot of money, and we are happy to see you keep crushing it, which you did yesterday. Coach, you want to talk about that trade? Why it was that Woofers was able to laugh to the bank and you were sitting with your hand up your ass?
Yeah, so we actually grabbed bottom yesterday before a move higher. Me and Diamond have been using some of those like FVGs, and we capitalized on it. We literally bottom ticked it there before the leg up in the afternoon. And one of the things I want to note, guys, is when you have those all-day uptrends, if you really look at the chart, you had higher lows all day. And yeah, I love saying higher lows because it's the best fucking trend we ever see. When you have that all day on the broader chart, like when you zoom out on the whole day, even though yesterday was slow, we couldn't break 397 to the downside. There was no chop. Shorts were getting sucked in all day. And the closer you get to 4 o'clock, the more in trouble shorts get, right? They miss their window of opportunity. And what you see as a result in Power Hour, and where I think it gets its name, is shorts lost their opportunity. They pack it up for the day early, and then bulls just have full control, right? If bulls run it up too fast, too quick at 12 o'clock, there's plenty of time for bears to step in and hammer it down. If you get that slow, steady grind of a day, as it gets closer to the bell, I'm thinking, wow, bears are packing it up. We're squeezing. All dips have been getting eaten all day. Nothing's going to change into the bell. We saw a nice dip down to like 380, 398.50, and we rode it up to 400, man. And that was the magnet level there. I think I sold just because I was happy with the gains, and Woofers Diamond hands it because that 400 was the magnet. That was his target, which is a little bit smarter there. So kudos to you, Woofers. And, they call me Edward Trimmy Hands or Trimmy Turner, but, it works for me. So base hits add up. That's all I'll say.
All right. Let's wrap up the show now, guys, with today's top watches. We'll go around and ask the head traders what it is that they are taking a look at headed into today. And we're going to go ahead and get started with Coach Dipka.
Well, as I mentioned before, there's really, I'm not really going to cycle through a bunch of individual stocks today. I just want to look at S&P 500 and maybe take a look at Amazon as well, but that'll be more so for Friday and Monday on Amazon. So today we're focusing in on SPY here. And as I mentioned, 402.31. I'm looking at 402.31 and I'm expecting a decent scalp opportunity to the downside. That's going to be my only trade for today probably, or it will be a retest of 400. Okay, so 402.31, I'll scalp it for puts to the downside, and I will go about my way and enjoy Thanksgiving, okay? That's it. In and out today.
All right, next up, Diamond.
My top watch today is going to be AMD. They had a really strong move yesterday after they had sort of based from their breakout last week. So they based for about 6 days. Finally got a little bit of continuation from that initial move higher yesterday into the close, especially. So I'm going to watch the 75.25 level. We've got a gap to fill up to 76.4. We should open up right above the 75.25. If it can hold a support, I want to take calls off of that. If we don't get that opportunity and it just rips up to fill the gap, I'll be looking to short up there at 76.5.
All right, thank you, Diamond. Money Mander.
All right, chips are the trend. I'm watching NVIDIA today for continued upside. We liked the short here off of that doji candle at the 618 retracement, which was good for about 17 points to the downside, but absolutely hammered off that 150 psych level, breaking out of this cup and handle to the upside. So I'm watching this immediately to 163 upside. Above that, I think we retest that 167, 168 from last week.
All right, and lastly, Snipes.
Guys, today's a little special. I actually got 5 levels for you guys today. The first one that I'm looking at is 401.29. I have this as an old rejection level. The next one that I'm looking at is 400 even. That is a pretty big psych level, as we know. The one under there, I'm looking at 398.62, then 398.28, and last but certainly not least, a bounce level, 397.84. These are the levels I'll be watching today.
All right, thank you, gentlemen. That's going to wrap up today's show. Again, happy Thanksgiving, everybody. Take some time to step away from the screens, enjoy time with family. We appreciate you guys all tuning into the show. If you didn't know, the 7 of us, we do have 2 head traders that aren't on the show today. We spend all day trading live in the Discord. You can join by going to kane-capital.com. We'll see you guys in there in about 27 minutes for some trading today. But once again, thanks for tuning in, guys, and we will see you back here on Friday morning.